Hi guys, welcome back to this week's Technical Insight. All three major US stock indices closed the day higher on Friday amid optimism that a deal to avert a potentially catastrophic US debt default was close at hand. Democrats and Republicans inched towards a deal on Friday with just days to go before the Treasury Department warned that US could run out of money to pay all of its existing spending obligations. Treasury Secretary Janet Yellen said that the new figures suggested that the so-called X date when the US run out of money to pay all of its bill could come as soon as June the 5th, 4 days later than the previously forecast of 1st of June. The broad S&P 500 index rose 1.3% to 4,205 points, while the Dow Jones index posted a more modest 1% gain to finish the week at 33,093 points. The market is rising on the hope that they will probably be announcing very soon that we avert the default. Tech-heavy Nasdaq ended Friday up 2.2% at 12,975 points, fueled by a continued rally in tech stocks like Nvidia, which stands to benefit from the widespread adoption of AI. The chip manufacturer smashed Q1 earnings expectation last week and has massively upgraded its Q2 target revenue to $11 billion. The stock surged to a high of 26% in a day, breaking the intraday record and sparkling an AI stock surge. But not everyone benefited. Intel and Amazon were both down. Intel, which peaked in the Northeast and focused on producing traditional CPU chips, was down 5.52% on Thursday. Traders are now concerned that the chipmaker is behind the times as other companies surge ahead. Amazon also closed 1.5% down, though this may be down to a new statement from cloud computing company Snowflake deleting old data and reducing their reliance on AWS, Amazon Web Service. So let's take a look at the technical outlook of both Intel and Amazon this week. First, let's look at Intel Corporation. For the past 1 week, it is down 2.03%. For the past 1 month, it's down 0.68%. Year to date, it is still up 7.23%. Now, key levels to watch out for Intel Corporation would be the key support level over here, which is a double bottom formation around the $24.59 level. Now, this double bottom formation is connecting the low in the October period of last year, as well as in the February period of this year. Now, a double bottom formation is a strong bullish kind of chart formation, and this would provide a good support level for Intel share price should prices come and retest this $24.59 level. On the resistance side, we also have a double top formation over here, connecting the high in November as well as the February of this year. And this is around the level of $31.34. So this will definitely also be a strong resistance level to watch for Intel Corporation share price. Now, since October of last year, Intel share price has more or less been in a range-bound kind of condition and also has been limited by the 200 days moving average, as you can see here. When we try to test this level in March of this year, prices seems to be rejected by this level and hence been pushed down. So playing that Intel is still going to continue its range-bound kind of situation, we foresee that the resistance of the $31.34 level is likely to continue to hold. And this level has now found confluence with the 200 days moving average at $31.33, and also the upper bound of the Bollinger Band at $31.48. Hence, for now, I think for Intel Corporation share price, I would feel that it will be safer on the conservative side to take a short position around the 200 days moving average at 31.33 and then take profit around the $24.59 level. On the indicator side, the MACD indicator is reading negative 0.12. And I can also see that since the crossover of the MACD line below the signal line on 13th of April, prices have been on a short-term downtrend. And this is likely to continue as both the MACD line and the signal line have crossed below the zero baseline. Hence, there's now negative momentum in Intel Corporation share prices. On the RSI, the high that we see this year was around April of this year at a reading of 73.45. That's on the 3rd of April. And since then, the RSI has been coming down and hence it has since been limited by the 50-point neutral mark and has since stayed below that level since the 22nd of May. The current reading at 46.04 is 4 points below the 50-point neutral mark. Hence, the momentum reading on the RSI is either neutral to a bit negative. The 14 days RSI base moving average is reading at 44.58, which means that it is also below the 50-point baseline, thereby signaling to us that there's currently very weak momentum in Intel Corporation share price as well. So with both the MACD and the RSI concurring that there's negative momentum or weak momentum in Intel Corporation share price now, it will be prudent for traders to take a short position around a 200 days moving average at 31.33 and target the double bottom support that you see right here at $24.59. Next, let's look at Amazon.com. So for the past 1 week, Amazon share price is up 1.65%. For the past 1 month, it's up 14.35%, and year to date, it's up an impressive 40.55%. So with that figures, we can conclude that Amazon, since the beginning of the year, has been on an uptrend. So the primary trend of Amazon now is an uptrend, and hence we should try not to go against the primary trend and look out for buy opportunities. Key support level to watch for Amazon share price would definitely be the year-to-date low, which happened around the January period at the $81.43 level. When we hit this point in January, we can see that Amazon share price actually rallied up 40% to a high of $114 on the 3rd of February. And after that, prices actually had a pullback and reached a low of around $88.12 before it started rebounding again. So the two key support levels for Amazon share price would definitely be $81.43 as well as the $88.12 level, which happened on the 13th of March. Now, connecting the low in January and March will form an uptrend line for us over here in green, and that could provide support for Amazon share price going forward in line with the primary trend that we observed since the start of the year. Key resistance level to watch out for Amazon share price would definitely be last Friday high around the $121 level. Now we see a peak of the share price at around the 114 level in February, and connecting this high together with the high that we saw last Friday would provide an uptrend resistance line, and that could provide a channel for Amazon share price to trend in following the primary uptrend. Now, if you look at the technical indicators, firstly, the 50 days and the 200 days EMA level, which is at the the red and amber line, is starting to cross over each other. Once the 50 days moving average line crossed above the 200 days moving average line, it will have formed a golden cross, and that is a bullish signal for Amazon share price going forward in the mid to long term. If you look at the technical indicator of MACD, the reading now is 0.429, which is a positive reading above the zero baseline. Hence, it means that there's still positive momentum in Amazon.com share prices right now. The RSI level at 68.57 last Friday also tells us that there's strong and healthy momentum in Amazon share price right now. Although I do note that it is just 2 points away from the 70-point mark, which is the overbought signal of the RSI indicator. Now, if the RSI indicator breached above the 70-point mark, it could signal to us that there may be likely a pullback that's going to happen soon for Amazon share price, much like what we see in the February period this year, when the RSI level reached the reading of 76.66, it actually comes down again, and hence you can see the pullback during the February to March period of this year, which is when the RSI breached the 70-point overbought signal. So with the indicators telling us that there might be a pullback happening soon according to the RSI indicator, and the Amazon share price is in a primary uptrend and a likely golden cross that's going to happen soon, I believe the prudent way to trade the Amazon.com share price would definitely be to buy on a pullback, and a pullback to the 200 days moving average level at the $107.90 level. That would be a good entry point for Amazon share price, trading to the mid to long-term uptrend of Amazon.com. So with that, we come to the end of this week's video. Thanks for watching. If you find this video useful, do give us a like and share. In the meantime, as always, trade safe, and we'll see you again next week in the next Technical Insight.